Hi, last time we did our first step on financial planning was noting our expenses and how it is useful in lot of our financial goals. We will move on to our next step. Before we move on to our next step, I have a question to ask. How many of us, when we take a shower before going to the pool, think that we have taken the shower so that the pool doesn't get dirty or we're doing a favor on the pool owner? 90% of us would be possibly. Well, that's not the case. We take a shower because the water keeps our skin hydrated and we don't get affected by the chlorine. Similarly, we have a product in our financial planning which people take because the agent is behind them. Yes, I'm talking about insurance. That's the next step of our financial planning, which is a very important tool to guard our fort. How to guard our fort means all the wealth can be eroded if we have not properly guarded our fort. We can become one step poorer in our financial wealth if we don't guard it or we have not taken these instruments. So, what are the basic insurance instruments that you should be having? One is health and second is life. In today's video, we will be talking about health insurance, the advantages of taking a health insurance, and what all you should think about before you take a health insurance. Most of us, when we tell them that you need to take a health insurance, the retort is very fast. I have it from my company. Well, very well, you do have it from your company. But does your medical illness know when you jump from companies? We are not a generation that's going to remain in one company throughout our life. We are not going to join and retire from one company. We're going to keep jumping from company to company. And there is always a lag before your last day and your joining. Our illness is not going to tell us that I'll wait because X doesn't have an insurance. Once his health insurance, his or her health insurance is in place, she can fall sick, she or he can fall sick. So those are places where you can be caught unawares. Secondly, we need health insurance when we stop working or post our retirement. But at that time, the insurer isn't willing to give you insurance because we have all sorts of lifestyle diseases on our way while we are working. Again, it's a challenge. So the advantages of taking a medical insurance is when you buy it young, you get a larger cover, more than what your company will give, because the companies will always give you a basic requirement, not the complete requirement. Second, you will get, once you have been regularly buying your insurance, post your retirement also, your insurance is in place. You are not affected by the waiting period of a pre-existing illness clause, which is typically 3 to 4 years depending on what your insurer is giving. So these are the major advantages of buying a medical insurance on your own and not depending wholly on your company. And also, if every time tax saving is a point, you do get a tax saving benefit through your health insurance policies, also give you a tax saving benefit. Next, what is it that I should look out for when I'm buying a health insurance? So most of the insurers now give cashless card. So what does that cashless card entail? I can just flash this card and I don't have to pay anything when I am hospitalized. To flash the card and to get a cashless facility, we will have to see that the place that the insurer is having adequate coverage in the place that we are buying his policy. And what all places are covered. Many a times the insurer covers a very local area, a state, whereas outside the state it is not covered. So we have to be careful of what the insurance is. The next is the copay clause. What is copay? Copay means, as the name suggests, means I also pay along with the insurer. So that percentage can vary. We also insurance where you don't have to pay anything at all. It is completely cashless, whereas there is no copay clause at all. So all this affects pricing, and pricing alone should not be your criteria when you are buying your health insurance. The next is sublimit. What does sublimit means? You take an insurance for 5 lakhs and then you have your room rent itself for 5 lakhs. Of course, I'm exaggerating it. Then it doesn't get paid most often. Why? Because there is a limit of a percentage of your insurance only can be claimed as room rent. So we have to see that our insurances don't have a sublimit either, and even if they have a sublimit, it is a realistic sublimit considering what the current room rents are in hospitals. The next is any major exclusions. We have to be aware of what are the things that are excluded from our insurance. And last, before I wind up, my suggestion is please don't buy this insurance for your agent, and also don't just rely on what he or she is saying. Read through and go through your policy, understand your policy, take your time and ask all your queries to your agent before you do the final sign up. Don't sign up and blame the agent if you have a bad experience afterwards. Thank you. Stay insured, be happy.